What is up, everybody? Logan here again with another video. This is a video I've been wanting to make for the Discord for a little bit. We've been trading 11 DTEs a lot more recently just due to the sheer nature of volatility. If you guys could take the time to leave a like on this video, I'd really appreciate it. It helps the channel out a bunch. We're on the road to 10,000 subscribers. We're like 150 away. So if you guys could, join that group and just keep pushing the channel, I really appreciate it. I'll continue to have great videos. I'm a little stuffed up right now just with the weather change. It's just so cold right now up in the northern states. So it's like 9 degrees or something. I hope you guys are staying safe as of lately and everybody's been cool, and the family just, everything's been going good. So let's hop into this one. So first off, I want to start by saying this is the 11 DT strategy. So every time you place this trade, you want to place on the options chain, you want to look for 11 days expiration. Let's first go over the charts and when a good time to take these trades are. Now, this is like the only chart you're going to need for this is the 90-day 195 minute, and then I have the 90-day hourly chart as well. I don't have my TTM squeezes up right now. Here's another fantastic one. I use this as more of like my confirmation to the other chart. So if you look here, this was Monday, and if you look, so this was that Friday 12/17, right? That's where the chart's currently split on my 30-day. So I'm going to take you back to a trade that we put on Monday morning with the Discord around 9:45, which would have been at the tail end of this candle right here. This chops the market into hours. So it was right around this tail end of the candle, 45.50, where the price was trading at the time. It was a put credit spread. I'll show you guys the strikes too. We'll jump into it and then you guys can see how successful it ended up being and why I was able to roll the strikes up, what made me make that decision, and then when I decided to throw the call credit spreads on, and then why they weren't even close to getting touched either. So this is a great strategy for if you're in this buy zone on this hourly chart, right, and on the 195 chart. You want to make sure that they coincide very well. Now, there's only one thing that was kind of iffy on why I did this, right? We were underneath the moving averages when I placed this trade, right? It was right around here, around this 45.50 area on this chart. You guys can see it's that 12/17 again. So it's not breaking a rule, but it's definitely one of the rules you want to keep your eye on for if you're putting positions on when we're underneath the moving averages. But understand that the stock market is all about mean reversion, right? And you can see that for the past couple of months, we've chopped pretty perfectly in this channel on my 90-day 195 chart. Could we continue down next week? It's totally possible. Do I expect that? No. Okay, so now that we have gone over the charts that I use, and I showed you guys when we took that position, let's dive into the account statements. We can do the math here, and I can show you guys how I turned $25,000 basically in collateral into an extra 5K on top of that. So I turned 25K into 30, or made 20% on my money in 11 days trading this strategy, doing 11 DTE. As you guys can see here, I started placing some orders around 43.30. I canceled to some earlier because the market was a little it was just being a little weird. And I knew that trying to fill 30 contracts at a time would be more difficult than just doing 10 at a time. That's one thing you should learn about trading SPX is try to fill stuff even when you're rolling. If you have 50 contracts, right? Or if you have 30 contracts, when you roll them or close them, try to do 10 at a time. That's seriously a secret that I've learned as far as getting quicker fills, because there's less contracts that have to be worked in one specific order. So as you guys can see here, this was me opening this position when the market was around 45.40, 45.50. I went to the December 31st expiration 2021. That's why that 21 is there. You guys can see the date was 12/20, which that makes it 11 days expiration. Filled 10 at 45, 10 at 50, 10 more at 50, 10 more at 50, and 10 more at 50. So just for the sheer math, let's just keep all of this at 50 to make this easy rounding. So we have 50 contracts going. And you guys can see through the week, what did I do? I rolled these up. Now I canceled the order at 30 credit, but I did fill at 25, 50 contracts. So if we pull up my calculator here, this is where we're at so far. And you guys can see here, these are 5 wide contracts, right? So 5 times 20 or 5 times 50 is 25,000, right? 5 times 50 It's 250, but this is options trading, so it's 25,000. So let's take a look at the 50 contracts. So far we opened up 50 for 50, right? So 50 contracts times 50 cents. We'll do that really quickly. So we initially opened this for $2,500, right? Or 10% on our money. So $2,500 on our 25,000 is 10%. Now that is my number one parameter when it comes to 11 DTEs. I'm looking for a 10% return. We will go into that under the trade tab at the end of the video on where would I place a trade right now if I was to do an 11 DTE. So I think it's a good time to place one personally. So as you guys can see, we opened up for 2,500 bucks. Then we got right here 50 times 25, right? 50 times 25 comes out to $1,250. So let's add another $1,250 to our 2,500, which puts us around $3,750 right now. So we did that move. We did that 2 days later. And then you can say, Logan, why'd you do that? Well, if we go back to our charts, look at this rip we got. We're now officially by the middle of the week. That was a Wednesday, 12/22. Well, if you look at the end of the day on Wednesday, or like we put that around 12/20, right? Right around this candle, the market had then ripped from 45.50 all the way up to almost 4,700. We were 46.80, I think, when I rolled those strikes up. You guys can see that I rolled these strikes up to 44.95. Now you're asking, why did I do that? Well, if we go to the trade tab, if we go to SPX on the trade tab, oops, that's Stitch Fix, SFIX. That almost got me. I was like, what is going on? If we go to SPX on the trade tab, I have a couple positions on right now currently. And then if we go like 11 days out right now, which we'll do at some point in this video, but let's say, now at this point, it had been 2 days. We don't have a 9 days expiration, but basically act like this is 9 days away. Act like the 18th is 9 days away, right? If we scroll all the way over to here, you can see the expected move for that one is 87.5 points. So what I did was when I did that roll up at 46.80, the expected move was about, I think it was 110 points at the time. And I tried to place us, if you guys look here, about two times outside the expected move. I think it was about a 1.83 times multiplier on this fill. So 44.95. And then if you guys look, when I filled that, I was like, let's hold on. Let's just try to collect all this premium. And the market just continued to run up. So on the 27th, which this is now 4 days from expiration, which was the Monday, if you guys come over here, we'll go to the 27th. So the market's been ripping. We had the pretty nice rip this day, which was the Monday. We threw call credits 100 points when the expected move for the week at that point was about 50 points. Because the VIX was so low. I think the VIX was down to like 17, maybe 16 and a half at this point. And we threw call credits on saying that it wouldn't go above, you guys zoom out here, 48.70, 48.75. We only placed half of them. So 15 times 25 on top of that, let me pull the calculator back up for us. 15 times 0.25, or sorry, 25 times 0.15. That came out to $375. So we're going to add that as well to the position. So if we do that, we add 375 onto 375.0. Now we're at 41.25. We did one last roll the very next day, towards the end of the day, right? I mean, this was like 2 o'clock. We rolled that put up, got 20 more credit on the 50 contracts. So that's another, was that $1,000? Yeah. Whoops, not times, I want to plus 1,000. So now we're actually over 20%, which is kind of stupid. You can see here, I did start closing. I closed 10 of the call credits the day before expiration. I closed just 10 of them, let the other ones right into expiration. So we could then subtract 50 bucks. So if we subtract 50, we're at that just, and then after, fees and commissions, it's right around 20% there. So that's the math behind it. So we hop back over to the charts. Basically, all as I did was I placed down here, right? You guys knew my first initial positions was in the 4,300s. The VIX was pumping. We got a really nice runway of over 200 and some points at that point, like a good 4 to 5% on the market. After it had already declined from 47.30 down to 45.30, so it had declined 200 points. I'm a big fan of getting long there, right? This is like where you turn possession back over, right? Like here's the defense, stopping the offense. The offense said, you know what? Let's throw a Hail Mary. Boom, we hit a really nice trade. And that's how we do it. The RSI was green. It was around 65. You know, we were going from red to green. The TTM squeeze was also moving positive. And then lately, you know, the market's kind of coming down into this zone where I prefer to get long here again. Not saying the market's going to go up this week. Powell's out on Tuesday. But now let's go to the trade tab as if you were to place this trade right now. We went 11 days out. What I'm looking for here is around this 84% out of the money range, but it's really, I'm looking for 10% on my money. So I would currently place one at 45.35 for 50 credit. I would get 10, 20, maybe 30. It all depends on the account size. This is a play that I would use 20 to 25% of your account on. Don't put 50%, don't put 75, and don't put the 100% in, because you know what happens is you get emotional when you do that. So if you put your whole account in and this play doesn't work out, let's say that was your only loss of the whole year too, right? Your only loss this whole year happened to be the trade you put your entire account into, you would feel like a clown. I would feel like a clown if I did that. So don't do that. And then you have to look too. I'm doing 1.75 times outside expected move, which, you know, 87 and a half. So let's get the calculator again. Calculator. 87.5 times, gosh, how would I do this? 175% is 153. And then if we do the math, that 4677, oops, 4677 minus 4535 comes out to 142. So it's in that range. Now it doesn't have to be exactly, you know, 1.75 times. I think if you're at least 1.5 times outside the expected move, you're good. Of course, there's a little bit of volatility skew, and the close at the end of the day was really interesting. I think we dropped 15 points in like the last 15 minutes or something. So just in that ballpark, it doesn't have to be perfect, but this 84, 85, 86% chance out of the money, if you get the direction right, you can roll the strikes up. I'm really just looking for 10% over 2 weeks. I just want this strategy to be my main focus this next year as I dabble into other businesses. There's just a couple other things, you know, I want to scale other things. And I love trading. I'm always going to trade. But when the market's this volatile, where you're getting your face ripped off, upside, downside, right? And you're seeing the market get tired and then it falls and we get bad news. And it's just exhausting to try to day trade when you see moves like this, right? Like drastic up, down, whoop, pop back over the moving averages. Not for long. Oh, we're back. No, we're not. Just exhausting. So this strategy is for people who are looking for a more laid back. You guys can go in the comments. My goal a year in my account's 80%. My investors are pleased as well. That's just my goal. So my one goal too this year is to start a hedge fund. That's one of my plans. So I'll keep everybody posted on that. So it's just kind of like, I just want something for my own personal trading that's more laid back. This isn't the only trading I do. I do 0 days, 1 DTE, 4 DTE, 21 DTE, but my main focus has been the 11. Let me know if you guys have any questions about this strategy. Now, for stopping out or rolling, you just don't want to let these get into the money, because if that's the case, you're going to have to pay a debit to roll it. If it does get in the money, though, that's why we're only using 25% of our account, right? So then we can widen these contracts, pull them down even further, push them out in time, and you can roll that way, right? But I would prefer getting 10% on 25% of my account, which grows at 2.5% every 2 weeks in just this one trading method. And it's been really solid with this math. So you guys can give the strategy a shot. Let me know how it goes for you. Let me know if you guys have any other questions, if you want me to get deeper into rolling these, what to do if they're tested, when to worry about managing them. I personally wait till the week of expiration to manage them, just because it gives the market time to work itself out. I'll take a look at the math, the market sentiment. You know, the Qs are down currently, 6% this last week. And my SPX play, the latest one we put on, is still not in the money. You guys know in the Discord, we were chatting about it. So just pay attention to that. If you guys want to join the Discord, the link's down in the description. We trade a lot of 0 DTE, 1 DTE, 4 DTE, and 11 DTE. And if you guys want to join along, come hang out. So that's going to be everything for me. You guys already know I love my community. You guys are the best. Thanks for raising the money for charity. Thanks for everything that you guys do. And I'm going to continue and start to post consistently every weekend now, as I've been a little bit busier in the week with how I've shifted this new year. But I do want to keep making videos for you guys. Just a lot of energy. So I hope you guys have a fantastic 2022, and we will continue to attack the market in all different shapes and forms. So I'll chat with you guys soon.